Well, let's focus on a couple of numbers that we're expecting then later today. UltraTechCement, well, that's one stock that we'll be looking at. The big boy, the big daddy from the cement space will be delivering numbers, and normally it comes during lunchtime. Now, if you look at it, in terms of a stock price movement, it's not moved at all in comparison to the last quarter. So in quarter one, the stock price till today, it's absolutely on the day that they delivered numbers, is virtually not moved, just 1% or thereabouts a movement that we have seen. Consolidated numbers, what do we expect? Well, you have revenues that should come in higher by close to around 14.5%. EBITDA number will jump up by close to around 38%. And profitability as well will be higher by close to around 71%. Remember, we have a cheat sheet for UltraTechCement because now they have started delivering their operational numbers. And the volume growth was very, very impressive. So in the consolidated basis, it was up close to 16%. Part of that includes the Middle East operations. But the India business, the growth has been impressive at close to around 15%. So they have outgrown the industry, indicating they've gained market share. And a seasonally weak quarter, capacity utilization levels have been the highest that we've seen for quarter two in the last many, many years. And that's on a higher base. So that's pretty good as well. Blended realizations, though, they'll be flattish to marginally down on a year-on-year basis as well as on a sequential basis. So bulk of the top-line growth or all the top-line growth will be because of volumes. What are the factors that affect margins, though? The realizations, well, they don't play a role. In fact, they'll be a bit of a drag. And they have a couple of sticky costs because they've increased, their increments are likely to reflect in quarter two. And also, there's been a couple of maintenance costs as well that could dent that performance out there. Operating leverage could play out in their favor, though. And input costs, that's power and fuel costs, could dip a little bit. PAT number, well, it sees a bigger jump because of higher other income and lower effective cost. We'll be waiting by for management commentary. And the debt number as well has come down to reasonable levels of around 2,500 crores. But they have been, increasing their capex, so we'll have to see where that number goes.